You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tosaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, ladies and gentlefolk, it is time once again for the old OB, the old option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the good old radio network. You guys know the drill. Website, app, best places to go for the deep dive into the archives. You want to subscribe, get it delivered to you, then, of course, your favorite platform, iTunes, TuneIn, Pocket Cast, Stitcher, Downcast. There's a million of them out there. Choose the one you like. I like Pocket Cast, but to each their own. Pocket Cast is great because it works across all different platforms. We have iOS, we have Android, we have PC here, so it works with all of them, so it's great. But to each your own. Even all of you out there, a ton of you I know who are still using the iOS podcast app. It's terrible. It's the worst, but c'est la vie. That's what's native to the platforms. People use it. Either way, however you listen live, of course, mention live, of course, every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern via Mixlr, MIXLR. Grab it, set it, and forget it. We are exploring some new things to add into that mixture of live for you guys. We were talking about that this morning on our conference call about what we could do to improve and add more outreach. The problem is most of the other live platforms are video primarily, and we like the audio. So we're working on some ideas for you. Right now, Mixlr is the place to go. If we add more, we'll let you know. Either way, however you listen, live, after the fact, hit us up. Questions, comments, insights, all that good stuff. You know how to find us. We do, yes we do, like to hear from you guys. Joining me on the program today, let's spin. I need a little sound effect for spinning the wheel. Either way, let's see who we got joining me on the old all-star panel today. Let's start close to home. Let's see how the internet Skype gods are smiling upon Uncle Mike Tosaw, formerly of RCM Wealth Advisors, now of St. Charles Wealth Management. Uncle Mike, SCWM, how's it going, sir?
Outstanding, but trying to get better all the time. That's the challenge we face. Life's so good in St. Charles. How do we make it better? Biggest challenge with which we face.
There are worse things. First world problems over there in St. Charles. I like it. Now, moving off to another part of the country where they're still battling rickets and scurvy, I am joined by the rock lobster himself, Mr. Andrew Giovinazzi. I crack myself up sometimes. I don't know why. From the Option Pit, Mr. Rock Lobster, welcome back to the show.
Rickets and scurvy. That is, I don't even know where to go with rickets and scurvy. I mean, you make fun of, pickles and heroes and St. Charles, and I guess you just slam the whole coastal Maine community with rickets and scurvy there.
Well, it is a coastal community, so scurvy, clearly nautically themed disease. And while you're going one nutritional deficiency, why not throw rickets in there as well? They're all good for one, good for a couple over there in the hinterlands, the far, far coastal regions of Maine. All right, let's get the ball rolling here before I crack myself up too much. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody, welcome to the trading block. This is indeed the portion of the show where we break down what was moving, shaking, rocking, rolling, going on in today's activity. Kind of a weird day. Most of the major indices finishing higher on the day, about 0.5% in the S&P, nearly a full percent in about 0.8% in the Dow, and the tech-heavy NASDAQ up nearly a full percent as well, about 0.9%. So almost up a full percent. And VIX cash taking, I think, technical term is a bit of a drubbing today, coming in off the weekend and deciding, let's just get the rest of it. What we put back into it last week, let's just get the rest of that out of there. We don't need that. Off about 3/4 of a handle, closing right around 1270, 1269 in that range. All this kind of on the heels of all this back and forth about Trump pardoning himself and everything else, and potentially China maybe ratcheting up the trade war again. None of this enough to really derail the bullish headway we had on the day today. I guess, another day, another bit of drama on Twitter, another bit of trade war drama, and another 0.5% rally. So I guess the market's been there and done that by now. It's going to take more to derail them. Speaking of derailing things, you can never derail our resident bull, Uncle Mike of SCWM. Uncle Mike, what say you, sir? What caught your eye in today's activity in this unstoppable bull?
Well, a couple things. I would say that we've been in a range since early May. So almost a month now, we've been in this range, at least on SPY, between the 270 and 274 level. And today we gapped up and we opened above it and we closed above it. We've been flirting with the 275 level pretty much all day. We were not able to close above that, but we were very close to it. So curious to see if we can get some type of continuation tomorrow. But in terms of the day itself, it kind of reminded me of a guy I knew in college. Sarge was his nickname, and he was on the kickoff team. And so every time you'd see him, you'd get real excited because he'd just sprint downfield on the kickoff team. It always looked like he was just going to lay somebody out, but he never did. Sarge never really progressed very much as a football player. Phenomenal athlete, but just couldn't quite catch the whole hitting thing. He'd always sprint down the field and stop. So every time you'd get excited, you'd see him running downfield. It looked like he was just about to lay somebody out, and then right before he would just stop. And that's kind of what this market did today. Early in the morning, we were gapping up. Just watching the S&P futures pre-market, we were definitely gapped up from the weekend. Market shot up right at the open, right around about 15 minutes into the open. We hit our high of the day. And then it just kind of stopped. It just kind of sat there the rest of the day. We channeled. We went down a little bit. We went up a little bit. But then probably around, I would say, around 11 o'clock Chicago time, a little bit thereafter, we just kept trying to get through that 275 mark, and we never could. So it kind of felt like watching Sarge back in college on the kickoff team today. Getting all excited, thinking something big was going to happen, and it never quite did. But the good news is for us bulls out there, we did close above a pretty key level of resistance, in my opinion. So we did have that. Some other news that we had going on today, it looks like Apple announced that they're going to have another operating system coming out. So that should be exciting. Apple, of course, the stock that I still like to follow, of course, not quite like I used to, but Apple was hitting some new highs on the day today. The 193.42 is the new all-time high on the day, so that's always pretty exciting. Also, some other things that we have going on in the various sectors. Technology led the way, up by 0.8% on the day. We had a few things. I shouldn't say that. Consumer discretionaries led the way. That's up over 1%. But overall, it looked like something really exciting was going to happen, but unfortunately it never did. But you know what? We have tomorrow.
Your buddy Sarge should have played in this era of flag football. He would have killed it, I think.
I think he would have too, quite frankly.
He just missed his era by a few decades. Now everybody's out there playing flag football. Forget this full contact stuff. He would have had a new lease on life, a new career. Who knows? A few years, you're probably going to see D1 scholarships for all that good stuff. Either that, they're going to say to you, hey, you play actual tackle football with the helmet? Here you go, full ride. Go crazy. So all you got to do is suit up. So, probably headed for a lot of fun stuff in that area. Before we go down that rabbit hole, let's head back to the land where they're just carving out of that primordial ooze of rickets and scurvy. While you were dealing with that, Mr. Rock Lobster, I don't know how you have time really to look at things like volatility futures when you're dealing with the basic tribal needs of existence. But still, that aside, what caught your eye in today's activity, sir?
Rick, I'm still trying to I'm still trying to deal with rickets and scurvy. I think we had a close below 13 VIX for a while. This is the first one in a week or so, maybe since last week. Getting down to some lower levels of volatility. So I think this was kind of what I will just say is a relatively confirming rally, meaning, vol kind of did what you expected to do. A week ago, we were 1836 to 1271. So who knew what would happen with the vol? So I, for whatever reason, I think that everybody's starting to shrug off all this trade war stuff and everything else like it's going to kind of get done. At least that's what it's pricing right now. So I would just say this is kind of a normal, orderly rally with vol doing sort of what it's supposed to do. VIX kind of doing what it's supposed to do, sort of just drifting a little lower. We're not rallying with those huge percentage moves. This is just, I don't know, people feel like they want to be long again. So I would just say, as from a vol point of view, it's just kind of a boring normal rally with the volatility futures starting to get back to what I would call kind of a fairish range relative to where they should be in the cycle. And that's what today is, really, really just one of those days. We had a lot of the pit chatties kind of just rolling long calls up and stuff like that. So for the most part, pretty happy.
Happy, crazy pit chatters, not dealing with scurvy. That's a good thing, right? That's if they're happy, things are going well in the pit chat, then things are good in life. Other things were pretty good to break down as well. It is the beginning of month. That means we have the month, I should say, which means we have the numbers for last month coming out of our friends over there at the OCC, the Options Clearing Corp. And May was another decent month. Surprise, surprise. Some things were happening that contributed to a wee bit of volatility and volume. As a result, OCC announcing their total cleared volume for May, reaching 411.2 million contracts, 8% increase from May of last year, where they hit about 380 million. Year to date, their ADV, again, this is for everything they clear across the board, up 25% from 2017. It's at about 21.3 million contracts a day. It compares to 17 million this time last year. So that's a big jump. Again, a lot of that reflected in kind of that February, early March kind of explosion of activity and volume. So we'll see if I don't think these numbers will hold throughout the year. Summer will surely eat into them a bit, but still. So far, May at least, still looking pretty active. Let's get down a little bit farther down the rabbit hole to what we're looking at. We're looking at the options. Overall exchange-listed options volume hit 403.7 million contracts, up about 10% from May of last year. Getting a little bit farther down the rabbit hole, equity options volume, total of 366 million contracts. That's up 12% from May of last year. That includes cleared ETF options volume of about 151 million contracts. That's also a 12% increase from May of last year. Index options, kind of the lone, well, actually not the lone, is one more, but one of the few dark sides here over there at OCC last month. Index options volume down 4% to a mere 37.5 million contracts in May. And the other not so bright spot out there are the futures, cleared futures over at OCC, 7.5 million contracts in May. That's down nearly 50%. It's 44% from May of last year. And then we were talking about this, in fact, talking about some vol views last week, about some people going to extreme lengths to explain what the heck's going on out there in the futures, because OCC. They don't clear a lot of futures. They pretty much clear VIX futures. And then now the new Bitcoin products over there at Cboe, and maybe a couple other things thrown into that mix, but not a ton of things. So it's primarily VIX futures. So if those numbers are down, VIX futures are down. And of course, we all know that is indeed the case. A lot of that can be laying, of course, at the doorstep of some of these past tense products like XIV, or these neutered products like SVXY, not really churning and burning the futures like they used to, but either way, not lighting it up like they used to. I don't know, Mr. Rock Lobster, any thoughts, or Uncle Mike too? Any thoughts? We'll start with Rock Lobster, just because I dragged him in first, so he gets the pride of place. Mr. Rock Lobster, any thoughts? Does this surprise you at all? And then what are your thoughts about those futures? I don't know if you heard our conversation on Vol Views on Friday, but there was a long piece in FT kind of trying to explain what's going on with the futures out there, and they kind of put it on the fact that no one wants to buy the futures anymore. The long demand has shriveled up rather than the people got burned out shorting and don't want to come back. So they're kind of taking the other side of that coin. So maybe two questions in one. What are your thoughts on all that? Those volume numbers, any surprises there? And then B, if the futures are surprising, what do you think about that notion that maybe it's no one wants to buy them anymore, sir?
Well, don't you find that funny? Nobody wants to buy the futures anymore after just what happened.
That is a little surprising to me, but yeah, I've seen more surprising things.
I also think the fact that XIV kind of disappeared, that can't be good for the volume, right? For those futures.
Yeah, people are going far and wide to find explanations. I don't think you have to go very far. I think
you
that's pretty much it.
Lost 10% of the volume, I think, probably with those products. They took SVXY and they cut it in half. They took UVXY and they cut that. They dropped that, knocked it down from 2 to 1.5. So that's 25% drop. So, I mean, the most popular vol products, they basically they went out of business or decimated them. VXX is still, like we say, happily crappy in the same way that it always has been. So if from that point of view, oh my gosh, well, if all your big products go away and then the volume disappears, that's kind of what the reason is, I think.
Yeah, I'm kind of with you. I was surprised to see such a lengthy treatise on why there's no more volume, when it seems like you could probably point the fingers pretty readily. Uncle Mike, what are your thoughts here on these overall volume numbers, and any surprises for you contained therein, sir?
No, I can't say I'm surprised, just given the recent events with things. In terms of nobody wanting to go along, that part actually does kind of surprise me. But one thing to always think about with this is that different things become cool and they go in cycles. I do believe that volatility will be cool again. And by cool, meaning people will want to trade it and they'll have so much money to where regulators will allow it to happen, and because it'll create more business, I believe. But I don't think we're at that stage right now. Volatility is always cool in general, of course. But in terms of the public perception of its coolness, I don't think it's there right now just because of what happened in February. So with that being said, I think that it's really not too much of a surprise besides the one area with which I mentioned.
Speaking of what's cool, Uncle Mike, before the show, we asked all of our listeners out there, pray tell, what is on your mind? What do you want on your brain that you want Uncle Mike to talk about today on the old strategery block? We gave him 4 choices. Some of your favorites. We gave him recycled some from last week that they didn't get a chance to vote on or didn't pick, so we can roll them into the mix. We've got hedging with VIX versus SPY puts, an old standby. We have maximizing short put spreads. A lot could be read into that, so you could take that however you like, listeners. How to roll your short calls, or how to trade Skew. Uncle Mike, what do you think is winning with the vote so far?
Well, I think, because we actually did the Skew one a few weeks ago, I believe. So I will go with, and I did the put spread one a couple of weeks ago as well. So I will go with rolling your short calls. But if want some repeats and for me to go in depth, I'm more than happy to serve the people with whom really make this show possible.
Well, people so far, 46% saying how to trade Skew. So either they missed it last time or they really wanted it again. These are the ones you gave us. So we're just reusing them. Yeah, 46% so far saying how to trade Skew. Maybe you can mix a couple in if you want. If you have something you really want to talk about today too, you can do a twofer. How about that?
We're doing Skew. If they want Skew, we're doing Skew, baby.
All right. So far, time is still on your side, sir. We got another, I don't know, 10 or so minutes before Uncle Mike gets to whole court. So get those votes in. If you're listening live, obviously. If you're listening after the fact, guess what? You missed it. But you probably still follow us on Twitter. So you probably should have seen the poll and gotten in there while the getting was good. Meanwhile, it's time for us to get going, to get some good options activity. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down the weird, the wild, the wondrous, the head-scratching paper that lights it up in the old market. Kicking it off as we like to with our weird Tesla mystery puts. Tesla catching a bit of a bid today, outpacing the market by about 4x, doing nearly 2%, about 1.7% to the upside here, closing just shy, ever so close to the 300 handle, 296.67, up about nearly 5%, or excuse me, $5 on the day. They do about $1.70 in terms of contracts a day. They do a little less than that, actually, about 125,000. But we're not looking at front month at the money. No. That's easy. Any schmo can do that. We're looking way out to the deep, dark downside, listeners. And people were looking out there again today, even on the day when the stock's up, about 2%. People still liking themselves some crazy, funky mystery puts to the tune of our favorites, the Jan 2019 50s, which are worth about $1 right now. So they've come off quite a bit. Another roughly third in the last month or so. They're trading about $1.50, not even a month, about a couple weeks ago. They come off quite a bit. And doing nearly 600 contracts today. Again, pushing about 56,000 in OI today. Let's scroll on down to some of our other friends. The Jan 2020 puts. Look at AUG here really quickly. A little bit of play in August. The AUG 2019 50 puts doing 200 today. Those things are trading for a whopping $3, and there's a whopping 400 open. So 50% increase in OI today. Headline. Let's see here. Oh, someone also trading the June 2019 430 and 40 puts, doing a bit of a deep in the money vertical, which is interesting, but we're going back onto the dark side. Oh, and people were liking these here in Jan 2020. Apparently Jan 2019, it's too close. It's too reasonable now. People can see that. It doesn't sound like the far distant future like it did, let's say, a few months ago. So people are moving instead a little bit farther out, a little bit further down to the Jan 2020 50 puts, where it actually looks like maybe a vertical went up today because the par puts in Jan were also trading to the tune of 1,731 of these Jan 50 puts were trading. That's over 10% of the OI. There's just a little bit shy of 17,000 contracts open on this strike, listeners. So over 10% of the OI trading again today. So these puts, clearly where the action is, these things are trading about $4 and change. So they're not that cheap. And yet they're still lighting it up. Also worth noting, the par puts doing 1,620. I'm going to go out on a limb and say there's probably a bit of a vertical going up there. About 13,000 contracts open there. Maybe someone deciding pars are too rich, too close. We're going to roll down to the 50s. Probably more of a bit of a straight up spread. Also noting nearly 400 of the Jan 2020 20 puts. Try saying that 5 times fast. So Mr. Rock Lobster, while you're busy battling scurvy, someone was clearly slinging a lot of these downside puts. Is that you guys over there in Carmen line?
So, as I just talked to myself again while I was muted, is that what you're saying to me?
It's a side effect of scurvy, well known.
Because you know what it does is it addles your brain. So no, we're not. By the way, I have one question about. Doesn't it always look like Tesla every time it's the worst? It looks the worst. His news is bad. Everything else is awful. Doesn't it always just come back from the dead? Like I swear to gosh, it is the Lazarus of stocks. It will never die. And I think all those puts are going to end up going worthless, and that put person's going to be very unhappy in Tesla.
It does have that Lazarus ring to it, does it not? It's one of these names that just when you write it off, just when the bears have their claws and their teeth out, another press release comes out with the flamethrower or something else saying, look over here. They're masters of saying, look over here. Pay no attention to the man behind the curtain. And so far it seems to work. Who are we to question such things, stir? Instead, let's roll on. Speaking of rolls, to good old Melco Resorts and Entertainment Limited. This is an ADR, ticker symbol Melco, MLCO, closing today, 31.92, off a little more than 1%, but not a terrible day. A little bucking the trend out here a little bit. This is the name that doesn't do a ton of paper, does about 3,600. Actually, that's not bad for an odd block candidate. We usually do names that do about a tenth of that. Today, doing almost 10x that, about almost 31,000, about 101 to 1 calls over puts. Only 300 puts going up today. So let's dive into those. That's where the action was. No, of course, we're going calls. And pretty much of that 30,484 calls that went up, 30,100 and change were in this one sizable ratio. We got someone coming in here today doing the July 32.35 vertical. Looks like they're doing it 1 by 2, so looks like they're buying the 32s for $1.55, turning around, blasting out 2 of the 35s, as the Irish would say, for 39 cents, and said doing that whole thing 10,000 by 20,000 times, hence the 30-odd thousand calls. So the rest of the calls were pretty much traded a couple other contracts. That was about it. It was all these strikes. Worth noting, no sizable OI really to speak of, nowhere near the numbers we're seeing here. So clearly all open in paper here in good old Melco. And on the surface, it looks like it's one of our old standard friends. Buy some pretty much at-the-money calls and then do 2x to the upside. If maybe you got the underlying, so you're going to dump it all at that upside, or maybe you're just getting a little bit of a short leg, in which case Uncle, or I should say Mr. Rock Lobster's got a little bit of a queasy feeling in his old tum-tum. I know that makes him nervous over there. Let's go back and look at, over the last year. About a year ago, this thing was trading about 22 and change, $23. So it's had a good little rally since then, up about 8 or so bucks. It's kind of vacillated around, got as high. This is pretty much the high right here, right around 32. So we're pretty much right near the upper end of that 52-week range. Mr. Rock Lobster, if this trade is to be believed, then it looks like someone thinks the partay is going to go on. What are you feeling this one? Straight up? Are you getting a little nervous, queasy in the belly? You think this guy's got stock? That's why he's doing it 1 by 2. What's your spidey sense telling you?
It looks just like a straight up, I kind of want it, but it's one of those things is Melco one of those stocks that are going to really fly to the moon here? It's it appears that it's sort of I'm feeling maybe a little like a little buy sell 32 35 1 by 2. I mean, it's not really a stock that's going to go up more than $6, and well, I guess anything can happen, but it feels like they're trying to just lock in a cheap spread, and it doesn't look like a save play where they're trying to ride against an existing position, because the stock's been doing well. I mean, it could. Let's put it this way: it could be that they're long stock and they want to try to gas the upside, but the stock's been doing pretty well for the last year, so it's feeling like. Again, I don't know because there's any stock against it, but it's just feeling like they want to cheap right up, and it's like a summertime spread. Woohoo! Instead of a summertime read, it's a summertime spread for like really low dollars, coming in at around, what is that? A little under 80 cents, so it's 77 cents for those 32 calls. It's funny, but it's a long in resorts and entertainment. Who knew?
Is that your idea of a nice quiet summertime spread, 10,000 by 20,000 with tons of naked ricks to the upside? That's just a quiet, sitting on your porch, sipping a nice iced tea, rocking in the rocking chair kind of spread for summertime. That's what you guys do?
Exactly. What are those things? It's a Moscow Mule spread where
there you go.
You actually have to drink several of them if it's naked. Put
the overalls on, sit on the old porch with a little bit of a hay hay straw between your teeth, just watching your 10,000 by 20,000 contracts move your way, or hoping, maybe sweating a little bit as it gets a little higher. But we'll keep an eye on that one. I think we'll put that in the to be watched category to see how our friend fares. You never know. These are always fun to keep an eye on. Like we said, listeners, smart money, not always, besides money, I should say, not always a smart money. I would probably guess that this guy's not doing it naked. He's probably got stock, in which case he's happy, and he's putting the spread on to get a little bit more. And this also has the feel of, this is a classic, the classic repair spread type trade as well. It has sold off a little bit recently, but it's still at the upper end of that range. So I don't really see any need to be repairing a stock that's been in rally ho mode, but you never know. Crazier things have happened here as we move on to our next name here. This is all kinds of weird ones on the show today. Nektar Therapeutics, ticker symbol NKTR. Closing today, 52.5. This is a fun one just for the underlying alone. This thing just took a walloping off 42%. Or nearly 38 handles intraday, listeners. Got down, pretty much, it closed about $2 off its low, so it was pretty much at the lows. It opened at 62, so it was already feeling a bad day already when it opened, and it sold off another 10 handles from there. So not a great day for Nektar Therapeutics. Just a fun one. Just a fun one to keep an eye on here, some of these crazy ones. This name actually does about 3,000 contracts a day. I don't know anything about this name at all. I'm going to go out on a limb looking at the name and the underlying and the activity today that I'm guessing maybe one of their trials got thrown back in their face, or they found an issue with one of their drugs or something along those lines, because that's what tends to happen with these types of names when they have these aggressive moves. It does about 3,000 contracts a day, doing about 36,000, about 12x that today. Actually, interestingly enough, 1-to-1 puts and calls, 18,000 of each. Usually a day like today, heavily biased underlying in one direction. You see all puts all the time. And it is kind of what we saw for a while there. In fact, you pick up the front, actually not even front month, front week, and every strike across the board has some action in it, which is, extremely unusual for a name like Nektar Therapeutics. What caught our eye was a print out here in June, but you can kind of take your pick. There were a bunch of them. The biggest strike, the most action today was going on the straight up June 50 puts. These are a little bit out of the money puts. They were at the money briefly for a little bit of time this morning before the stock bounced. So people clearly like to pile in on these even strikes. Also, there's only 5 handle strikes out here, so you don't have a lot of choices. 55 in the money or 50. People went 50. The biggest print we saw there today was about 2,000 of the June 50 puts. Remember, this is a stock that does normally on a good day about 2,900 total. So, but doing more, almost that many, about 2/3 of it just in one print here today for $2. People gobbling them up. These puts actually went out 210 at 250. So that wasn't the nice. The spread actually went up about 11.35. So that wasn't too bad given the fact that they sold off and then rebounded since then. A total of about 6,000 going up on this strike on the day. So this is clearly where the action was today. Yeah, of today's action, about 1/6 of it going up on this one strike alone. Let's see any other big prints really quickly. That seems to be kind of where the action is. Again, I haven't had a chance to look at the news, but clearly not good out here in good old Nektar. I like the spelling too, Nektar. Little funky spelling there. Looking back at the year that was here, what a year it's been in Nektar land. A year ago, they were trading well south of where they are now, right around $19 or so. And then fast forward most of the year, they had some lofty heights back in March of this year, not too long ago. They were trading 105, 109. They got up there pretty good. And they were floating around there for a while, even as recently as their last earnings in May. They were still at around $80 or so. So they were still looking pretty good. And they were around $80 this morning or yesterday, I should say, until all this news broke. And then, of course, yesterday they were trading as high, or the first, I should say, traded as high as $92. So what a turbulence. It's off 40 handles from there. So, yeah, not a good day. Mr. Rock Lobster, any of your crazies piling into Nektar. And interestingly enough, for such a biased underlying, we didn't see that much bias in the options, which is kind of surprising.
Yeah, it's one of those surprisers. Actually, one of our clients was an early investor in Nektar Therapeutics.
Did you guys counsel him on maybe some hedging strategies, hopefully?
No, he blew out of the stock. He kind of made his money. But that's the only way I remember, because it used to be in the teens, and all of a sudden, then it worked out great, and then now it's kind of so. I mean, these 50 puts, line in the sand puts, maybe it's kind of hard to tell when the market was sort of flying around like this. But it's opening paper, so it appears that could be what it is, but or just somebody trying to hedge some stock. Maybe again, if you owned it from the teens not very long ago, $2 is going to look kind of cheap to sort of just at least stop yourself out if everything looks awful.
Indeed, sir. All right, let me get that going. There we go. All right. As we move on to our final name on the list here, listeners, let's go to really quickly, Uncle listeners, just getting Uncle Mike. There we go. All right, back on Uncle Mike. All right. And let's go to our final name on the list, which is Turkey, TUR. This is, of course, the iShares MSCI Turkey ETF, ticker symbol TUR. Closing right a little bit shy of $32, up about 30 cents, or about 1% out here. Turkey, once the sick man of Europe, not looking too bad these days, doing about 1,500 contracts a day. Today doing 26,000 and change, about 44-1 puts over calls. That's where the action was. The lion's share of that coming in. Looks like one sizable put roll. It is always nice to consider them, Mr. Rock Lobster, when they keep the numbers exactly identical on the leg. So then you know that they're lining up. It makes it easy. That's considerate of them, and I doff my cap to them in gratitude. In particular, what we saw was the June 30, July 27, could be a spread, looks like a roll, going up 12,666 times on both legs. Looks like paper coming in. A lot of mid-market trades. It looks like they're biased towards the offer here on the June 30 puts. So looks like they're probably buying those and then probably coming in to probably sell the July. Open interest, 17,000 and change on the June. Negligible on the July, hence why we think it's a roll. We've done this once or twice, listeners. Looks like someone maybe keeping the short put party roll alive, which makes it interesting on a couple of different levels. One, that they chose today, if it is indeed their short put day, they come in and take it off on a day when it's up. Maybe they like the fact that it was, in their way a little bit, but then they turn around and they don't re-roll back to the 30s. They're actually writing a line in the sand. They are indeed selling, and it looks like they are. Then it looks like they're rolling a little bit farther south, going down this time to the 27s, which is interesting. Usually you see that kind of activity if you're rolling a hedging put and you want to make your hedge a little bit cheaper. You want to give yourself a little bit more room to run on the downside. Then that might be the case. But still, interestingly enough, usually we see if you're rolling short puts, usually keep it the same strike. Maybe you get a little bit more aggressive if it's actually going your way. It looks like, let's look really quickly here when these Junes were put on. It looks like they were put on... let's see, about probably 12,000 traded back on the 16th when they were about 25 cents. And then we saw another, 15,000 trading on the day before. So probably in the 15th or 16th. So they've been on a few weeks at least out there before deciding to keep the rolling party alive. Let's look at the charts here out there in Turkey. We know the Eurozone's having some issues of late, and that's being reflected here in good old TUR. A year ago, this thing was trading around $41, got as high as about 45, 46 back in January of this year, and it's kind of been on a downward trajectory ever since. Got as low as about 30, touched 30 ever so briefly, and then bounced off it just a couple of weeks ago, and now kind of vacillating in this range. Mr. Rock Lobster, I think maybe that's why our friend is rolling down to a farther strike. He got a little bit spooked on those low prints. It says maybe 30 is a little bit too risky. I want to write these puts, but I don't really want the stock. So let's go down to 27. Is that your feel, sir, on this one?
Well, if he sold them for a quarter and then he's covered for 45, so he's down 20, and then he wants 70 on the next batch, that sounds kind of like what it should be. So this is, the Turkish lira is getting crushed. I think the president of Turkey is he's kind of a strongman guy. All these like brick type countries that are sort of not third world or sort of, I don't know what you call it, next world, or it's almost like it's like Brazil. Every time there's like huge political turmoil, it always seems like a buying opportunity. Probably that's what this person thinks, but 30, I think they're just a little too close to the flame, and they're just going to roll down and just wait a little bit and scoop this at 27. So I'm going to say they got a little closer to the candle than the flame on the candle than they wanted, and they're going to just 70 cents is about a nice price. They can still make money after their first roll, and 27 is it's almost down $20 from the high for this thing. So if you're going to draw a line in the sand, that's not a bad one for the year. I mean, in 6 months, what is $46 number? So I think 27 is a pretty good line in the sand.
Yeah, I'm with you.
If one were to draw one.
I think they got a little spooked too, and they went down. They want 70 cents. They don't want all those shares of stock. So they're rolling a little bit and getting a little bit farther away. Maybe the risk manager tapped him on the shoulder, said, "Do you really want those? What's going on?" And so he decided, "Yeah, let's go down to 27." Speaking of deciding things, it is time for you guys to decide, because it is time for the block of strategery known as a strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, everybody, welcome to the Strategy Block, which is the portion of the show where you guys take the reins this time, get to pick what Uncle Mike gets to talk about. Uncle Mike, things kind of tightened it up there in the interim there, with number one, How to Trade Skew coming in right now at 41%, but hot on his heels is maximizing the short put spreads at 35%. 6% only for hedging with VIX versus SPY. And I thought that one would get a little more love, but no love there. Only 6% for rolling short calls. Not into that at all. So maybe I'll let you choose, Uncle Mike, because they're both pretty close. They're within 6% of each other. If you have a choice, if you want to talk, I know that your put spread thing was maximizing the long leg, I believe, on short put spreads. So you can talk about that, or you might maybe want to do a combo of that with trade and skew. You want to go pure skew, whatever you're up to, sir.
Let's go with skew to start with. We will give the people what they want, and then if there's some time remaining, we'll talk about some put spreads. So what is skew and what can I do? What is skew? Skew is something to where there's some type of a difference between theoretical pricing as to where, in theory, the option price should be and where it actually is. So what I mean by that is, let's say that you have an at-the-money call and an at-the-money put with the same expiration. They should, assuming there's no dividend in the stock, they should be the same price. And with that being said, let's say you go one strike price out of the money. The one strike price out put should be the same price as the one strike price out call. In other words, let's say if it's the stock price is at 50, the 49 put should be priced, in theory, the exact same as the 51 put, meaning that the stock has just as much likelihood to go up as it does to go down. Now, let's say that all of a sudden we have some things happening. And the thing that I'm looking at, or the thing that I want to talk about, is the skew that could exist. Let's say all of a sudden that there's just a lot of people out there that are just extremely scared of the stock going down. Or there's a lot of people that are just very antsy for the stock to go down. So because of that, we have a lot of put buyers. And now in that same stock, the 49 put is trading at a level much higher than the 51 call. And that, ladies and gentlemen, is skew, and how it can work right there. Now, where skew first started in the marketplace was in 1987 after the crash. Before the October crash, often there really was not much skew that existed in the macro market, and I'm referring to the S&P 500, of course. So with that, after that day happened, there was a lot more demand for long put options to protect the market as a whole, because of the fact that if you're a fund manager, and then if all of a sudden the market goes down 20% in a day, you're probably not going to be too comfortable having the same market exposure, having experienced something like that. Now, thankfully for me, I was in 5th grade at that time, so I didn't even know it existed, nor did I care at the time. However, that skew that exists, that feeling that exists, it's still there to this day. Fund managers after that would start to buy put options out of the money on the S&P 500. They would be known as catastrophe puts. And the reason for that is, of course, they wanted to make sure that if we did have a crazy downturn in the marketplace, then they were protected from it. And to this day, that skew does still exist in a lot of ways in the macro market. Now, it does not exist as much on the individual names. And the reason is that there's an old saying in trading, stocks take the stairs up and the elevator down, meaning that when bad things happen, they happen very quickly. And so stocks can drop very quickly. And when the market goes higher, it doesn't really go up that quickly because it takes the stairs higher. However, in individual stocks, that happens more frequently, meaning that stocks can melt up, so to speak. So let's say, for example, that a stock has a good earnings announcement, or they have a drug that comes out that works really well. Well, if that's the case, then the stock can go up higher very quickly. There's reason for it to do so. So that skew with which I just mentioned does not exist so much in individual stocks. It does at times, but it's not going to exist quite as much in individual stocks as it would in the market as a whole, because of the fact that phenomenal news and stocks making the market go up 8% in a day like it could an individual stock, although it is possible, it's not going to happen anywhere near as frequently as it could possibly in an individual name. So with that being said, skew is something with which you can look for to where there's a difference in pricing between the calls as well as the puts. Now, with that, there's also ways with which you can find things. If you have some pretty advanced software to say, let's say that the XYZ stock's trading at 50, the 50 calls are trading at a very high level, but the 55 calls are trading at a very high level because there's some guy out there just buying a ton of those 55 calls. Well, with that, you have skew that exists between the strike prices. And you can then you can find, let's say, a very cheap call spread on it when you have that situation. Now, those are pretty tough to find. And a lot of times the retail investor, unless you have some pretty advanced software, you're probably not going to find stuff like that very quickly. Now, I'll tell you another story of some skew that it actually existed. It was actually back in February. I talked about it a little bit on the show, but when we first dipped in February, when the markets first dipped, I was pretty flat going into that. I'd taken some profits and I was looking to get back into some things. That was one that I actually got right. So that was good. There's plenty of them that I got wrong, though. And Mark Longo has no qualms about beating my head in every time a certain stock name comes up, i.e. Cisco. But I like to talk about the winners and the losers. But that was one to where we were able to kind of dodge a bullet to the downside. But I was looking to get back in. I bought some 285 calls for April. And so what was interesting about that is after I bought those 285 calls, and the markets are at roughly 270 at the time. And so I figured, all right, I'll just buy some cheap calls, see what happens. As the market was continuing to go lower, the 287 calls, and I'm referring to SPY, were actually going higher. Now, that's where some type of skew exists. Now, the skew existed because there was not necessarily a difference in the strike prices, but volatility was going so much higher, so much faster than the markets were going lower. And so occasionally you can run into situations like that. And so as that's happening, I put out a limit order. Now, ironically, I didn't get filled when it was going down, but then as the market went up, I ended up legging into it. I ended up getting in that case, initially it was a zero basis spread because of the fact that I got the 287s for the same price I paid for the 285s. But with that, there's some situations that can exist like that. They're very few and far between, but nonetheless, they can and do exist. So ultimately, the bottom line as to what skew is to when there's some type of an advantage that you can get from trading something. Initially, it doesn't necessarily mean that you're going to be right, because that one trade that I just mentioned, I ended up not winning on. But with that being said, it was a very favorable trade because of the fact of what the actual cost was. Now, here's another example of how you couldn't win. Typically, the out-of-the-money puts are priced higher than out-of-the-money calls, like we talked about on the market as a whole. Okay, so with that, then does that mean that you're at an advantage by buying a vertical put spread on the S&P? Well, in some ways, yes, because of the fact that the price that you got for the short put is so much higher than what you would have gotten had you done the same thing as a bull. But here's where the disadvantage comes into play. Let's say that the market's going lower, then theoretically the volatility on that short leg of that long put spread, long vertical put spread, is going to be working against you faster. So that's an area with a way with which that can actually work against you as you're doing it. Now, if you plan on holding it for a longer period of time, then that's a different story. But the point is that it's starting to work against you or the skew exists before you get into it. It still will likely exist once you already are into it. And by likely, I'm just referring to that because of the fact that it has existed for over 30 years now. But with that, you can be aware of that and look for trades that could possibly fit your needs. So with that being said, that is what I have for today on trading skew. And I will turn it back over to our host.
There you go. I love it when the people speak and then they get their answer forthwith. There's something nice about that. It's the immediacy of the program that we love. Now it's time for us to keep on rolling into our final segment. It's time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, portion of the show where we break down what's keeping an eye on for the rest of this week. Mentioned some of the macro nuttiness that is afoot right now. Pretty much another day, another dollar when it comes to that stuff. Earnings kind of waning. We saw a lot of the big names already pop off here. We saw tomorrow before the open on Tuesday. We got Duluth Trading Company. They are making up interesting men's clothing and accessories out there. And interesting. If you haven't seen their catalogs, I encourage you to take a look. They're pretty funny. They have some interesting illustrations in those. So they make all sorts of weird things like super crazy underwear and stuff. So check it out there. Duluth, if you're into that retail type of thing. We also have, speaking of the retail, Uncle Mike. He may not like this one because it's a little bit rich, a little bit pricey, but we've got Five Below coming out, I think, a little bit later this week here, which is, I know he likes Dollar Store. Five Below after the close on Wednesday. So if he can get a little bit richer, up to about $5, then Dollar Store, Five Below is his Huckleberry. And then we've got a few other coming out this week, but nothing really super noteworthy. So let's go back around the horn. Let's start with the Rock Lobster. Mr. Rock Lobster, we saw them come for the vol today. We saw them take it away. What are you watching for the rest of the week, sir?
Just really if we can see new lows for the year for VIX and have it stay there. Because we've had a heck of a time trying to stay in zone one this year. We haven't been able to do it for more than a couple days. So that really is the biggest one. And in case nobody's noticed, I think the Q is at an all-time high again, or the NASDAQ. I'm trying to make sure, but it's almost like that whole, we're right at all time. I think we're at all-time high right now. So, hey, who knew? We're already back up there. I mean, that was your chance at 154 QQQ because it is long gone. It's 20 handles in the rearview mirror.
There you go. It is behind us. Uncle Mike, sir, we're looking ahead. What are you keeping an eye on for the rest of this week, sir?
Well, I want to see if we can hold the new levels we've broken out in the S&P. So curious to see if we can hold that. Seeing if we can break out of the day of just staying just below 275 in SPY. So looking at that from a technical standpoint, and of course, just watching a certain someone's Twitter account as per usual.
I don't know who that person could be. Maybe the Rock Lobster, but you'll be disappointed because let me just tell you, he doesn't tweet very much. So if you're looking for that, he tweets more than you do. So he's got you on that one there, Mr. Uncle Mike. All right, everybody. That music, unfortunately, means we've come to the end of the epic party, the epic VXX erosion party that is the option block. That's mostly vol views, but we've got a little bit on there today. Keeping the love, or shall we say the lack of love, alive for vol these days as it continues to get crushed. We shall see what the future holds as we check back in on Thursday. But before we do that, we go back around the horn, starting with ye old Uncle Mike. Sir, how go things in the newly christened St. Charles Wealth Management?
Oh, by all means, to learn more about us, go to stcharleswealth.com. There'll be plenty of events coming up in the near future. We'll have a Facebook page, hopefully in the next couple of weeks, to announce a lot of the local events. And just really excited about everything that's going on here. stcharleswealth.com.
stcharleswealth.com. Tell the man what you think about his fox. He thinks it's pretty foxy. Let him know if you agree. And last but not least, before he goes back out to deal with his nutritional issues, Mr. Rock Lobster. What is cooking in the land of the pit? How goes the Asian option series?
Somebody asked that, like, looking forward to the Rock Lobster's Asian option trading webinar.
Clearly, you struck a chord. Listeners like to poke you a little bit. I like that. That's fun.
You set it up that way, so I guess that just makes sense. As far as what we're doing, VXX Made Easy, it's gone great so far. I think so anyway. Maybe some of the listeners can chime in about that. You're also going to see more of the Made Easy series. Heck, we might even do a Skew Made Easy one of these days. But if the VXX Made Easy is any indication, yeah, you could see that coming around. So, and our Trader Summit is in Chicago next week, so we'll be seeing you there. I'll be seeing you.
Yeah, I will be there I think on Wednesday. I'll be heading out the rest of the week, but I will be there on Wednesday. But there will be, if you're going to be in Chicago, come down, check us out. I think they do the whole SIBO shindig and all the 9 yards and lots of speakers and fun stuff, including the Rock Lobster. So if you're not tired of him enough, then there you go. You get an extra dose of him, and I'll even be swinging by there next week. Maybe we'll do some live shows there. It should be fun. And speaking of fun, I got to go do some fun things. So, of course, this is fun too. On behalf of the Rock Lobster and Uncle Mike, and indeed myself, I thank all of you out there for downloading, streaming, and subscribing. By the way, people asked me the other day, you guys do other shows besides the Option Block? Yeah, we do. We do a ton of them. They're all week long. And most of them, a lot of them are live. So Monday and Thursday for Option Block, Friday Vol Views, Friday TWIFO. And then usually in the interim, we do a lot of other shows that usually aren't live, but sometimes stay tuned to the feed because you never know. The Mixler, what's going to pop up live, a little bit of a surprise for you. We had a lot of interviews coming your way lately. So hopefully you've enjoyed those. And we'll see you next time right here for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.